Hey, good morning, everybody. Today is Thursday. It's 9 a.m. Eastern Time, February 8th, 2024. So just let's review what I wrote in the market wrap and compare what we have now in the book. Right? So first of all, DIX and GEX both jumped, both move higher. So dealers was willing to buy. And to move market nowadays is getting much more difficult because you see a 2 billion spike in the GEX, right? So tend to see small candles nowadays, and consequently suppression in volatility. Delta flows, as I told you guys, is totally bullish. Yeah, book doesn't show any weakness, and what I highlighted before, you guys have been seeing that the delta support has been going higher. I also said that a lot of people was looking for a pullback up to 4,900 this week, and I told you guys a lot of times that book didn't show this, show only 2030, and then market backtest 4,918. He reinforced in the closed group that was another buy opportunity. I also highlighted over here. As you guys can see yesterday, according the gamma, not delta, and consequently make like a correlation with positive gamma pattern, we saw a possibility that 4,905 be a support and consequently open with a gap up and a break of 4,005. I also highlight in the summary that I'm expecting a break up at 4K and a rejection at 4,005, 5,005, sorry, right? But at the same time, I highlighted, in the last line, that the normal thing is to see a gap down to burn out the premium in call contracts. Why? Because for the first time, we don't have too much discrepancy between call and put contracts highlighted over here in that page, right? But call has higher implied volatility than puts, more premium. So makes sense to open, if a small gap down and then see a recovery to burn out the premium in the call contracts and bring premium to the put contracts and allow dealers to sell premium and finance themselves to generate another gamma squeeze, right? So look now how the book it is. Yesterday, higher implied volatility in call contracts, lower implied volatility in put contracts. Bunny deltas, Vanna help dealers to bring premium to put and then finance themselves to buy calls, generate gamma squeeze, bring markets back up, right? Look at the difference between now the gamma design and the delta flow. Okay, before 4,905, worst case scenario 4,980, right? And big gamma resistance at 5K, but per delta, as I highlight in the summary, we supposed to be break up for 4K and a rejection at 4,005 is where book yesterday show us strength. Positive gamma pattern, sell strength, sell release by weakness. Okay, weakness is showing at yesterday, showing at 4,905, worst case scenario 4,908. So let's compare what we have right now. Folks, I just got home. I didn't see anything about economic data, so I'm just doing the presentation, reading the flow. So looks now what's happened is a little bit, little bit different. Now we have a lot of gamma and deltas was burned because especially gamma. The gamma is already being like removed, removed. A lot of call deltas, call premiums was burned because look at the implied volatility right now. calls is lower comparing than puts. So now makes sense to sell premium, to buy cheap, right? Exactly what we expected. But regarding 4,990, now is where we see weakness. Before was 4,905, right? So just drop 5 points. And the worst case scenario is not more 4,980. The worst case scenario now is 4,965. But markets bias tend to be jumping at 4,909. And look, the huge gamma that we have before at 4,035, basically it's already disappeared, right? The huge gamma that we had before in 5K, it's already reduced at least at a half. Make, more easy to break. But in another hand, look where they put a lot of gamma, 4,005. Exactly in the market structure where I told you guys that I'm expecting to see a rejection, because before was a delta resistance. Okay, so it's totally normal. We see markets trading between 4,909 up to 4,995, up to 1030, until they decide what the movement will be. Why? Because if you see, market trading between 90 and 95, it usually tends, to imply volatility to put contracts jump, and the implied volatility in the call contracts tend to going down, bring more premium to puts and remove all the premium from calls. That's, where we usually start to see a gamma squeeze. Okay? That's, the pattern. Especially because the GX jumped to 6 billion and the GIX jumped to almost 47%, came from 44. Okay? So you guys already see the difference between yesterday and today. First of all, the implied volatility now puts has more premium than calls, because the implied volatility in put contracts is higher. Instead of 4,905 be the first weakness level, now is 4,909, right? 4,995 now became resistance and consequently inflection point to the upside, and 4,005 is still the region that I'm expect a rejection. Okay? And the worst case scenario, instead of 4,980, now is showing us 4,965. Okay? Let me close the spreadsheet. Hold on, folks, my computer is a little bit slow. And let's give a check in some assets that I'm really bullish, right? That I'm really bullish. The first one is Bitcoin. I told you guys that I'm expect a big candle. So what I'm looking right now, I also told to my friend Samir that I'm expecting, Bitcoin back test up to Sunday. Okay, this resistance around 4,600 to 286 up to 4,600 and 344. I don't expect a break. Okay, I'm expecting, to back test over here and see Bitcoin trading at the level, and another, another flush up to 44,000 or 43,800 to see a 10K candle to bring Bitcoin around 50K. That's, the movement that I'm looking for. You guys know that I'm very bullish in MARA, especially because 30% of the free flow is being shorted. So it's a good setup to see a gamma squeeze. Okay, I had like anxiety, I didn't bought in the best price because we had like a gap to be filled, and this week the gap is already filled, and now the asset is ready to go and break the major resistance at 20.64. Breaking to 20.64, the next resistance and the most important candle is the 3 months, the quarterly graph that's located at 27.86. Breaking to 27.86, you bring us fastest up to $45. Okay, those are the resistance levels and targets in a short period of time. Okay, so I'm really bullish in MARA and I'm really bullish in Bitcoin. I don't know the economic data how came today, but looks like that we are seeing a recovery in DXY. The DXY is trying again to backtest the inflection point at 104.699. Okay, that's also totally normal because you have the CPI, PPI, whatever the inflation next week. So remember that I always told you guys, buy deep, dealers do buy low, sell high. If they already know, that's totally normal to see, DXY trading up at least at 104.699. And if the CPI come calm, we suppose we see this going down again. Graphically, so far is in attendance because it didn't break down the EMA 8, and now the EMA 3 is pointing north again. Also, another asset that you need to looking for is the TNX. Still a gap open, and according I just said about the DXY, it's the same thing. It's another gap up, is trying to go up. Okay, the tendency didn't change, but could you be a setup to buy cheaper bonds and to buy cheaper equity assets, risky assets, especially because they already brought us up to 4,980 according the option flow suggestions. Okay, the pain trade now is not go to the downside, is to go to the upside, especially because the CPCI and the CPCE jumped, one above one and another one at 0.9. So market participants decide to buy hedge, right? So it's a good setup for keep the trend up, especially because puts now is print higher implied volatility than calls, consequently more premium. Guys, take care.